Well, good afternoon, everyone. It's 10 to 3 here in West London on Wednesday, the 20th of April. The American market been running now for about 20 minutes. Still hanging on to yesterday's gains. The S&P was up 20 points a moment ago, but has given that back. And it's pretty much where it closed yesterday evening. So 4463 on VectorVest. The short-term trend is turned up, but all of the other measures of the trend, as far as I can see, are down, and VectorVest advocates caution when buying stocks at this time. Let's just have a look at the VectorVest Composite itself, which I think should be this one. Yes, as you can see, the buy-sell ratio is down below 1, and the MTI is down below 1. So the MTI defines the underlying trend, so it's in fact down. And if I put on the longest term measure of the trend onto this, should be 6-month chart, we can see that was a really good confirmed down signal here. Buy-sell ratio just couldn't get its nose above 1, but stuck its nose up here for a little while, and there was a confirmed up here which came to nothing. So particularly good day yesterday. And as I say, the short-term trend is down. I think that there's probably quite an important level here in the market, and if we broke that level, this would be this inverse head and shoulders reversal bottom. It's still got a fair amount of work to do before it will do that. Hopefully some of our shorter term signals will kick in well before there, so let's look at those. Confirmed calls are down. The DEW, which is a medium term signal, it's also down. Okay, so long-term trends, both the confirmed call and the underlying trend are down. The medium-term trend is down, and only the very, very first and shortest term VectorVest market timing system is up. So only the bravest should be taking positions at this particular point. If we have now a look at my old friend, the S&P 500, you can see we had a very, very good day yesterday off this 50% retracement, which was a confluence of this last old high. This pulled back in what technicians would refer to as a flag, and 1, 2, 3, 4, 5 waves in the flag. Went sideways here longer than I would have anticipated, but clearly there was holidays at work here. This move up yesterday, if you actually have a look at the hourly chart, there's 5 beautiful waves in this, which is impulsive, and I wasn't surprised to see a pullback. That pullback could easily take most of today, even under the most bullish circumstances, before we move again. But this is a very strong move off this low, and I would expect that it's going to have a go much higher. They say where Apple goes, the market goes, and I've got Apple on here, and Apple in fact charting the same flag pattern after this very strong impulsive move upwards from these lows. And again, if we have a look here, in terms of fib, that came to a 50% retracement, not quite as pretty a confluence as there was on the SPX. If we put on my 8-day stochastic, you can see that it's also showing that the market is right down in the oversold area, and we're showing quite strong reverse divergence here. The price making a rising bottom, but the indicator making a falling bottom. It's on a VectorVest hold, but certainly like the S&P 500, I suspect it's going to pull back a little bit today, but certainly a break above 170 odd would, I believe, precipitate quite a strong advance here. So I'm going to be looking at Apple, although I don't hold it in my portfolio. Gold gave me a bit of a hard time yesterday. It pulled back and I got stopped out of Goldfields. I've got the charts here. Let's have a look. And let's have a little gander. If I chart those, take off the stochastic for the moment. This is Steel Dynamics, and that in fact was a beautiful spring, and that's gone up very nicely indeed. I made a little bit of money. The stops at entry, so that one is banked, and I in fact didn't notice that myself. One of our subscribers from the Oxford area, Steve, pointed that out to me at one of our Q&As. We have such a huge amount of expertise within VectorVest UK these days. So this is XOM. Oil was well off yesterday. It seems to be hanging in there. We shall see. This is Exxon Mobil, of course. CCC. This is a CCJ, should I? CCC is a UK stock. CCJ, uranium stock. I like the way it pushed up on higher volume, and I also like the way that it's pulling back on falling volume. So clearly this 30 odd area is a very important area, but certainly that hasn't got a great deal of traction, and that's hardly surprising because the general market's been moving down now for the guts of a couple of weeks. This is the GDX. Also took a little bit of a haircut yesterday. My stops at entry in this, and I'm going to give it, I've taken a little bit, I'm going to give it another couple of days, and that's Goldfields, where I thought I was off to the races on Monday, and then yesterday I got stopped out under these lows. What can you do? I think, folks, that to me the situation looks quite optimistic, and on the SPX we're pulling back. We've all got this wonderful reverse divergence here. A pullback after yesterday's run is well within the bullish nature of this movement. And on the futures market, well, in the UK we call it spread betting market. In the spread betting market, I'm long of the S&P since 4399, I think, yeah, 4399, down of those lows yesterday, just about at the open yesterday, 4399, yes. Stops at entry, of course, and let's see how it goes. Certainly a break above that level would be very positive indeed. So I hope that helps, folks. I think that everybody with the confirmed down in place, with the DEW in place, with the buy-sell ratio less than 1, we should still not be planning long fishing trips. You should be watching your stop losses very carefully indeed, and doing your best not to have a moment of weakness with those stop losses. So easy to do, I know, from personal experience. Let's wait for, and certainly I will not be taking meaningful new positions until I see the DEW print a buy signal. Thanks very much.